July 7, 2025. The world is on edge as the US and China, the two largest economies, face off in a high-stakes economic and technological struggle. Headlines warn of new US tariffs targeting not just China but a dozen global partners, signaling a dramatic shift in international trade. China fires back, calling the moves an economic attack, as both sides escalate a cycle of action and reaction that could reshape the global order. This isn't just about trade. It's a battle for technological supremacy, national security, and the future of the global economy. As Europe and global markets watch nervously, the consequences will soon reach ordinary people everywhere. Let's break down what's happening, why it matters, and how it could impact your job, your savings, and your future. The Trump administration is set to impose sweeping new tariffs, up to 70%, on imports from 12 countries, a move that marks one of the most aggressive trade actions in recent history. These tariffs will impact both allies and rivals alike, sending shockwaves through international markets. After a failed negotiation pause, Washington is doubling down on its America First agenda, aiming to force trading partners to lower their barriers and open their markets further. The move has sparked alarm worldwide, with the EU, India, and Japan preparing potential retaliation and warning of serious consequences. Economists warn this tit-for-tat escalation could disrupt supply chains, raise consumer prices, and slow global growth, putting millions of jobs at risk. Businesses are scrambling to assess their exposure, unsure if this is a negotiating tactic or the start of a full-blown trade war that could last for years. It's a high-stakes gamble. Can the US reshape global trade in its favor without triggering economic chaos and lasting instability? China isn't backing down. In the face of mounting pressure from Washington, Beijing is making it clear that it will not be intimidated or coerced into submission. Officials and state media have ramped up their rhetoric, calling US actions reckless and provocative and vowing to defend China's national interests with all necessary countermeasures. The message is unmistakable. China is prepared to respond forcefully to any perceived threat. Beyond tariffs, Beijing is furious over US moves against its tech giants, like the blacklisting of Quectel, which threatens China's technological ambitions. These actions are seen as direct attempts to stifle China's rise as a global tech powerhouse. China's response is twofold: preparing retaliatory tariffs, likely targeting sensitive US sectors like agriculture, energy, and even high-value exports. Beijing is carefully choosing its targets to maximize pressure on American industries and farmers. At the same time, China is accelerating efforts to reduce reliance on American technology, pushing for greater self-sufficiency in critical sectors. Massive investments are pouring into China's semiconductor industry and domestic software, with government support fueling innovation and research. The goal: to build a homegrown tech ecosystem immune to foreign sanctions. Meanwhile, Beijing is strengthening ties with other nations through initiatives like Belt and Road, expanding its influence and forging new economic alliances across Asia, Africa, and beyond. China is positioning itself as a defender of global free trade, presenting an alternative to US-led economic models and offering new opportunities to developing countries. Even as it builds parallel systems in finance and tech to rival the US, China is inviting others to join its vision for a multipolar world. The world is being pushed toward a split. Nations may soon have to choose between competing economic and technological blocs, each with its own rules and standards. The dragon's roar signals a new contentious era in global affairs, where power is contested not just with tariffs, but with technology, alliances, and influence. The tech rivalry may prove even more decisive than tariffs, as both sides race to secure their future and shape the next generation of global innovation. China's long-term vision, a resilient, self-sufficient economy, less vulnerable to US pressure, and capable of setting its own course on the world stage. The era of unchallenged American dominance is over. A new chapter in global competition has begun, and the world is watching to see who will shape the future. The European Union is caught in the crossfire of a global economic standoff, facing US tariffs that threaten the stability of its key industries and the livelihoods of millions of workers across the continent. At the same time, European leaders share deep concerns about China's trade practices, including issues of unfair competition and intellectual property rights. In Brussels, officials are desperately negotiating for tariff exemptions from Washington, hoping to shield their economies from further shocks, even as they increase pressure on Beijing to address subsidies and open up its markets. But internal divisions complicate Europe's response. Some nations are heavily dependent on Chinese investment for infrastructure and jobs, while others are more concerned about the impact of US tariffs on vital exports, like cars, machinery, and agricultural products. In response, the EU's new cybersecurity rules, set to take effect August 1st, aim to protect its digital market from foreign influence and cyber threats, and favor transparent, reliable suppliers over low-cost Chinese manufacturers, hoping to ensure both security and fair competition. Europe is striving to assert its strategic autonomy, seeking to chart its own course, but risks alienating both superpowers in the process. The challenge is immense: stand up for its values and economic security without being crushed between the competing interests of the US and China. The continent's leaders must find common ground and present a united front if they hope to navigate this era of great power competition and uncertainty. Europe's ultimate goal is clear: avoid becoming collateral damage in a conflict it didn't start, and maintain its influence on the world stage. The dilemma remains unresolved. How can Europe protect its interests and values in a world of rising tensions, shifting alliances, and unpredictable challenges? Despite the escalating rhetoric, global stock markets are near record highs, up 11% since the tariff pause in April. Investors seem unfazed, betting that threats are just negotiating tactics and that central banks' easy money will cushion any shocks. The cry wolf effect has dulled market fears, with traders focused on strong earnings rather than political risk. Yet, warning signs are flashing. The US dollar has dropped 11% this year, its worst start since 1973, hinting at deeper concerns. The market's calm may be fragile. If tariffs hit and China retaliates, optimism could vanish overnight. Beneath the surface, risks are building, and a sharp correction could follow if reality catches up with rhetoric. The disconnect between markets and geopolitics is striking, and potentially dangerous. Are investors ignoring the storm on the horizon? While trade tensions dominate headlines, the US just made its 2017 tax cuts permanent, locking in lower rates for corporations and individuals alike. This move was cheered by markets, fueling a surge in stock prices and boosting short-term economic optimism. But beneath the celebration, it added over $3 trillion to the national debt, a burden that will weigh on future generations. America's debt now tops $36 trillion, a staggering figure that continues to climb with each passing year. Economists and policymakers are raising alarms about long-term fiscal sustainability, warning that unchecked borrowing could trigger a future crisis or limit the government's ability to respond to emergencies. The policy mix is contradictory. On one hand, tariffs and tax cuts are designed to boost growth and protect American jobs, but on the other, soaring debt puts pressure on the dollar and the broader economy. As the debt grows, the dollar weakens, making imports more expensive and eroding the purchasing power of American families. This dynamic could also erode investor confidence, leading to more volatility in financial markets and uncertainty for businesses. A weaker dollar does help US exports become more competitive abroad, but it also means higher prices for consumers at home, especially for imported goods. Globally, these trends signal doubts about US economic stability, raising questions among investors and foreign governments. The US relies heavily on foreign buyers, especially China, to finance its debt. If confidence falters and these buyers pull back, the fallout could be severe, potentially dwarfing the impact of any trade war and sending shockwaves through the global economy. America's internal choices, on taxes, spending and debt, are shaping its global posture and exposing new vulnerabilities at home and abroad. The urgency to rewrite trade rules and address economic imbalances may be driven as much by mounting domestic pressures as by international competition. In a volatile world, the American equation of tax cuts and rising debt is a risky bet, one with consequences that could reverberate far beyond US borders. The US-China conflict is forcing a dramatic overhaul of global supply chains, especially in technology. Western firms are scrambling to reduce reliance on Chinese tech, redesigning products and dual-sourcing components to avoid future disruptions. Even Chinese companies are adapting. Quectel, for example, has licensed its tech to a US firm, creating an American supply chain for Chinese-designed parts. This friendshoring trend brings jobs to the West but creates more complex, less efficient networks. Despite the turmoil, demand for connected devices is booming. The global IoT market grew 23% in early 2025. The result, a fragmented, more expensive but potentially more resilient tech ecosystem. Companies must now navigate not just technical and commercial hurdles, but a maze of sanctions and security rules. The great rewiring of global supply chains is underway, and its impact will be felt for years. This US-China drama isn't just about leaders and policies, it's about your wallet, your job, and the choices you make every day, and the tech you rely on for work, school, and staying connected. Tariffs mean higher prices for everything from electronics to groceries as costs are passed to consumers, making everyday life more expensive. Supply chain disruptions could threaten jobs and local businesses, even as some industries benefit from new protectionist policies. The tech split may fracture the global internet, limiting access to apps and services across borders and changing how we connect. More secure, localized supply chains will likely mean pricier technology for everyone. The era of globalization may be ending, replaced by a new age of competition and fragmentation between nations. The decisions made now will shape the global economy and your future for years or even decades to come. Staying informed is your best tool for navigating the changes and challenges ahead.